can this mean that global money, and Rajesh made this point before you came in, that it is not that the global money was missing India so much because they were invested in other markets which have also done well. But does global money, quote unquote, make a beeline for India because they haven't quite allocated in the last 6 months, the last 1 year, the last 2 years, because of this verdict, or not quite?
So there is a near term and medium term to it, Neeraj. And near term, of course, because what Rajesh said, and everyone knows that such a significant amount of shorts are there. There was almost an active bet by foreigners by the sort of a rule that there could be some anti-incumbency and the political outcome could not be or may not be as good as it is turning out to be. And it's difficult to sort of fathom, why such a huge mandate would come for a foreigner. So in some sense, the near-term outcome would be reclaim of those short positions and unwind them. So to that extent, there could be a knee-jerk sort of reaction in markets when they unwind it. In terms of medium term, as you said, it is sort of very likely that lots of other spaces are opening up, given that the commodity cycle, upcycle is underway now. China is healing, and that essentially means the entire East Asia bloc is healing. Markets outside are very cheap. So to that extent, after this early reaction that you will see in next 2-3 days, it's very likely that things, you won't really have the kind of flows that you had post-COVID or post-2014 elections. It's going to be more dim because, incremental flows, have sort of more pastures to go to.
Rajesh, build on that conversation we were having, and of course, what Manish mentioned as well. For the last couple of months, there has been a sell India, buy China trade that's been happening. I mean, for obvious reasons, right? India trades 3 times the premium of what China currently offers. With this verdict, do you see a lot more foreign investors in the wings getting more confident about policy continuity and hence coming back again in a rush?
This is a question that I get quite often from domestic investors. Why are FIs not as enthusiastic as we are? Are we being, sucked into something that they can see that we can't see? To that point, I would just say that the FIs have a lot of options. The American markets, which is now 65% of the global market, is at a new high. Germany, Japan, France, Bitcoin, gold, silver, copper, all are at a new high. So yes, they could be missing India, but not as much because they are making money elsewhere as well, and they consider India as an expensive market. See, I think that barring this knee-jerk that will happen because of a short covering, and I don't know who's advising them to be short for such a consistent period. They've hardly put in any money if you take the last 3 calendar years into India when we have had such a fantastic bull market. But the point is that India, I think, if this dispensation comes back to power, as the exit polls are suggesting, then we have a very good, clear visibility for the next 5 years, which is a long enough period. And my sense is that there are a lot of investors, international and domestic alike, who want to take a decision only after this event. So I do see incremental money coming in. We'll have to see the pace of FII money coming in post that. But I'm sure that the domestic investors actually have upped their risk appetite. And my sense is that they're only waiting for this election event. And I can be sure that the domestic money will follow even more aggressively.
I think that's the point. Now, viewers, lest you all be thinking about what the exact nature of the exit polls has been, because there's a poll of polls that we've done, and there are a bunch of other exit polls that have happened. So let's try and break this down for everybody, because some people say that there are still some lack of clarity. Is this exit polls throwing up a number which is as good as it is right now looking, or could there be a slip between the cup and the lip? My colleague from NDTV, Vasudha Venugopal, who looks at this very, very closely, joins in for a few minutes to try and dissect all of this for us. Vasudha, good morning and good having you on a market show, because this is the markets for the next few days driven so much by what will happen on Tuesday, of course, but also what's come in the exit polls. Now, tell us, Vasudha, you've anchored all through the day yesterday. You've looked at various data. What has stood out for you in terms of the exit polls? And could there be a slip between the cup and the lip?
Absolutely, Neeraj, that's a great question. And that's something, there are about 14 polls that we saw, okay? And, there were about 40 polls, in my system as I was anchoring. And I realized that the most important thing is that most polls are predicting either a comfortable majority for the BJP or, somewhere close to the numbers, a little more than the numbers that were there, last time. So last time we know that the BJP got 303 and of course 356. And then we also in 2014, it was 280. And so this time the numbers that most exit polls have predicted are more than what the BJP got last time. The allies number seems to also be more than what it was last time because the NDA in Andhra Pradesh especially seems to have done better. The TDP seems to have done better. That is the sense that we get from the polls that we got yesterday. And today, government sources told us that the Prime Minister is going to address some very important meetings, including one on the 100-day program. So there is a sense of predictability that existed about this election right from the beginning, especially after the Ayodhya Ram Temple inauguration, the consecration that happened. And the Prime Minister has been taking meetings with bureaucrats and all that to put forward a sense of, to project a sense of continuity. And that seems to have been reflected in the exit polls as well. And like you rightly said, that there are always health advisories. These are just exit polls. But then these are too many of the exit polls saying that there's going to be a comfortable victory for the BJP. And the allies also seem to have done better, except in Bihar, where the JDU seems to be flailing a little bit. And in Maharashtra, there was just one poll which showed the India Alliance as, maybe a little ahead than the BJP, Mahayuti Alliance. But everybody else said the BJP would do better than expected. And the numbers are placing BJP around 314 to 325 is the sense that we got, mostly. And in fact, even more than that. So clearly, whole through the election, we did see, Neeraj, that, the whole, discourse was centered around the Congress manifesto, Muslim quotas, reservation, SC/ST reservation, who is going to change the reservation policy, who's not going to change the reservation policy. So clearly the emphasis was on social justice, that the emphasis was on a certain agenda, the Hindutva agenda of the BJP, but clearly all of that was couched in some academic terms of the Congress manifesto and welfareism. But Karnataka, for me, stood out the most, and that is to answer the question that you have, because in Karnataka was the laboratory of the Congress's welfare. Siddaramaiah was giving women of the state, free transport, and he was also giving women monthly sort of supplemental income, all of that. But still, most of the exit polls are saying that the Congress could make gains of just 4 to 5 seats, which somewhat, in some ways, is a setback to the Congress party, which is also harping on welfare in other states like Telangana. In Telangana, the BJP is expected to get around 9 to 10 seats, which is almost equal to that of the Congress party. So if these two Congress states give more numbers to the BJP. In Karnataka, the BJP was expecting that its performance might be hit by this whole Congress guarantees. So these two states really stood out for me. Other than that, there was a lot of chatter in northern India about UP. UP, last time the BJP won 62 seats. In 2014, it won 71 seats. This time, after the Ram Temple consecration, there was an expectation that the BJP will do well, but then the Samajwadi Party and Congress started this whole PDA, PDA theory and the PDA campaign, which is basically focused on the OBCs, SC/STs, and of course minority communities. And there was an expectation that they will do well, especially in Purvanchal.
Right.
But that doesn't seem to have taken place because most of the exit polls are predicting around 67 to 70 seats for the BJP.
Got it. So Vasudha, as we wrap up, is there anything that stood out in terms of either the state numbers that might be different than what the exit polls are suggesting? Like you said, one poll may have said Maharashtra, but one swallow does not a summer make. So in terms of the exit poll numbers that have come out, is there anything in the state verdict on the poll of polls or otherwise which is too good to be true from an incumbent party perspective?
Well, I really don't think so because even in UP, the cushion for the BJP is so strong that they do have more than 30-40% vote share in most seats. That even if these parties come together, even BSP, Samajwadi Party coming together could not really derail the BJP. So that for me is very interesting. But I do feel that some of their Maharashtra numbers, because Maharashtra numbers are still showing here and there. So I think that would be the most interesting seat to watch out for. The winning margins in Maharashtra, especially where the Senas are fighting fighting and the NCP is fighting are slightly lesser than where the BJP is fighting. So that is where I think, and BJP is also fighting on fewer seats in Maharashtra as compared to a lot of other allies. So I think Maharashtra will be an interesting seat, and that will be something that we will look forward to. And like I said, if they make any inroads in Tamil Nadu, Kerala, all of them are predicting at least 1 or 2 seats in Tamil Nadu and at least 2 to 3 seats in Kerala, which will be huge, which means that there is some success to the BJP, co-opting socio-cultural icons of Malayalis and Tamils. I think that there is some success to that is what we can sort of reflect after the results are out, but it remains to be seen if they will actually be able to get that kind of seat share and translate vote share into actual votes, which has been a challenge for the BJP all these years.
Right. Thank you very much, Vasudha. That was very useful. And of course, you've got a busy few days ahead. Good luck with that. And we'll, of course, connect back through the day. Well, that was a quick update coming in on where things stand. Vasudha Venugopal of NDTV 24/7 breaking those exit polls down for us. Manisha, moving the focus back to the markets, what do you expect in terms of immediate impact, considering that the mind of the markets has been positive, except in the last couple of days? With these numbers, should we expect a circuit on Monday or Tuesday? And what should your strategy be? Divide that between a trader, a tactical trader, I'm going to call it, and an investor.
So basically, investor, it's an easier one. It's very likely that 2-3 days of knee-jerk reactions pave way for relatively muted risk premium thereafter, because much of it would be driven by the technicalities. For traders, of course, if you're short, unfortunately, all sorts of stop losses will get hit, and that's on equities. I think on bonds, people were very comfortable of Modi's win. So I think increasingly there's going to be this confidence of a significant monetary policy easing. So I kind of think both from a trader standpoint, but also investors should look at significantly lower yields over the next 1 year. So you would want significant trades, long trades in bonds. If you're a currency trader, of course, it's very, very likely that you would unwind some of the stress that you had built. I kind of think that, barring a small case of a period of, US recession-led, currency sell-off, you could actually end up having next 5 years currency depreciation just at half % or 1% level. So I guess, from a currency trader point of view, unwind the position quickly, but sort of stay long India rates or India credit, because India risk premiums are pretty significant for the given currency macro that we have. So that's how I would sort of approach all markets on Monday, Tuesday.
Rajesh, that's an important point. I just want to kind of narrow it down to what should people who are betting on the equity markets, we'll come to debt in a bit, but what equity markets do from a theme sector perspective, because there is a lot of, there are two different schools of thought, right? One school of thought saying break it down into 5-year agendas, and can consumption, which is hurting, make a comeback in the 3rd-year agenda for the BJP, because the 2nd year was clearly around manufacturing and capex push. The other school says these are not, you may break it in 5 years, the BJP doesn't think that way, and these policies are for the longer term, and therefore continue betting on capex push, and therefore all of those beneficiaries, be it capex, cement, steel, etc., etc. Where would you place your largest bet on starting tomorrow?
Well, I think this is a bull market, as we've been kind of saying, and this bull market is the leadership of the bull market has been in the investment theme, not the consumption theme. So my sense is that I think the visibility that we are having on the investment theme, which is a multi-year thing, I would say that kind of will continue to be the key portfolio overweight. I would say that sectorally, we are positive on banking, capital goods, which is the entire investment and infrastructure theme, and telecom. Those would be the 3 sectors of focus as far as we are concerned. As far as consumption is concerned, really, we are not seeing any green shoots. Whether policy initiatives will trigger a upsurge in consumption, well, we remain reasonably slightly cynical of that. I think the focus will continue to be on the capital investment theme as far as the government is concerned as well, because there is such a need to increase capital expenditure as you move forward. For instance, the power sector, you need $500 billion of investment in the next 10 years. You can't move away from that. Otherwise, you'll get into a massive power deficit situation. So my sense is that government will continue on this capital expenditure program because there is such a dying need. And by the way, it's working.
Manish, I mean, you have the ability of taking a cash call, which most funds, or like Rajesh said, do not have the ability to sit on. What was your cash position before going into this event? And what happens now over the next couple of months? Do you, if you were sitting on cash, would you allocate it? Would you take some profits off the table? How would you do that balancing act in that sense? Or would you sit on a market neutral strategy where you'll move from maybe broader markets to large cap as well?
So sort of we are more asset allocation, big macro trades. And so I kind of like rest of the world more than India in equities. I like India rates significantly, and we have substantial long positions in India rates. And I also like India credit because I think it's a better way to play India balance sheet than equities. Because there also you get about 14-15% returns without much of vol. Given the great sort of balance sheets that Indian corporates and banks are. So that's how I would look at. I would continue with that position. I think if someone had cash call, I think the proxy for FI's entry, given valuations, would be private banks. They're relatively cheap vis-a-vis Nifty for, I think 10, 15 years, if you do analysis, it's sort of pretty cheap. So I think that part would get bumped up. Otherwise, power is a global theme, and I guess, even in India, sort of power should do very well. And Modi's sort of pet projects of infra, capex, defense, all of this, those, though they are very expensive, but then should gain more momentum. So from a sectoral standpoint, sort of a very large allocation to banks and more specifically private banks. And if totally underweight that you are in defense, infra, capex, you should be at least equal weight now.
Same question to both of you because you guys are bullish on, say, financials. Manish, I'll start with you and then to Rajesh. A lot of people are of the view that financials may not necessarily have the same kind of proxy growth to capex as they did in 2003, 2008 because the avenues for financing are a lot more wider. Balance sheets are deleveraged. Corporates need not necessarily go to banks as they did back in 2003. Manish, how do you think of this? Banks' valuations are great. Are they best bet as opposed to some of the others while you play the capex theme?
In fact, the competition to banks from non-banks and MFs
is reducing.
Reduced in last 5 years. So if at all there were to be a profit boom, it couldn't come without capex boom. And if at all there were to be a capex boom, be it in housing balance sheet or corporate balance sheet, it had to be funded by banks. So in a sense, it's inevitable that the growth of banking is more or less assured. I think the problem with bank is, RBI's view on sort of clamping down, at least regulatorily, on project finance and such likes, so that, they do not end up sort of taking risk the way they did in the past and actually price them well. So that is the biggest sort of headwind for banks. Private banks are better placed to sort of manage that risk. It is also very likely, Neeraj, that, not just banks, but pretty much across the markets, there are going to be significant capital raise. So people have to consider in valuing anything incremental in markets is that at least next 1.5 year, at least I see a huge pipeline of people wanting to raise money from equity markets because equity is relatively cheaper than, let's say, credit is. And so to that extent, if there were to be so much money raised, there's going to be a demand supply somewhat balanced versus complete imbalance that you have in favor of demand. And that would sort of tame valuations at margin.
You talked about how you like banks, but what happens, Rajesh, that question is for you. What happens to Modi stocks? Our market cap to GDP ratio is already 1.4. And if you look at Buffett's indicator, that is very, very stretched valuations. Do you feel like, and of course we will see this, retail investors who've not bought into that theme, like defense, railway, infrastructure, might rush in come Monday, Tuesday. Is that a double-edged sword? Do you feel like they could burn their fingers because valuations are stretched and it almost seems like buy the rumor, sell the news kind of strategy that may also play out for the medium term?
No, you're absolutely right. I don't think these opportunities are cheap anymore. So we are at a late stage of a valuation cycle, but I think what I'm encouraged by is really that we are at an early stage of an economic cycle. So if this current government comes in, the investment theme, which has started just about two years ago, has another 5 years to kind of play. So, your EPS, translation is the EPS will continue to kind of go up, even as, let's say, there is a risk that PEs may kind of come down. So my sense is that basically you would get compensated by earnings rise, even though Ps even if their Ps do contract, which I think are quite expensive. Having said that, these sectors will continue to trade at a premium to the market because of the multi-year, if not a decade, visibility that defense, railways, etc. are getting. So these will continue to be at a premium. They are not cheap anymore. I think it's better to approach these from a SIP investment framework. But what is encouraging is that we are at an early stage of an economic cycle. And I just want to address this banking question that Neeraj asked. Of course, banks are not a great play on the capital expenditure cycle, but then the valuations also do not reflect them to be so. They are definitely a play on the GDP growth of the country. And therefore, as you get a little more positive on the GDP growth trajectory, you'll get bullish on the credit growth trajectory as well. And the fact that today we are at the best NIM margins and the best credit cost, which are not, they are at the peak, but there is no sign that they're going to deteriorate. So again, I would say that the private sector banks, as Manish has been pointing out as well, are a good place to be.
The other aspect, Rajesh, could be what happens to, the last 10 minutes with both of you. The other aspect is what happens to the theme of domestic focused spaces versus export oriented themes, since you brought valuation. Now, they may not have necessarily a policy push, if you will, but the policy push is around Make in India. Company after company, especially the MNC ones, which have delivered some strong numbers, are talking about how sourcing from India is actually picking up for them for the world as well. Now, my question is, because of this victory and policy continuity, would you continue to bet on the expensive domestic focus names, be it defense, railways, capex, etc., or do you take a small tilt towards the slightly cheaper export-oriented themes as well, which don't necessarily have a policy push right now?
So, as far as I'm concerned, fortunately, India is giving you such a diversified set of opportunities. Look, this bull market, why I like this bull market is the breadth of sector participation. Autos, metals, banking, NBFCs, domestic pharma, telecommunication, capital goods, everything is going up. You can actually have a very diversified portfolio, which translates to a lower risk, and yet you can do extremely well as far as your investments are concerned. So, my portfolio is fairly diversified. Having said that, my emphasis on the domestic sectors will continue. I think on the power, equipment, etc. side, we could be underestimating the EBITDA expansion that can happen. So as far as investments are concerned, certainly the point that you made that some of these companies are also becoming hubs for exports, apart from the very strong growth visibility that they are actually witnessing in the domestic market. So my sense is that my overweight, if I can call it that, on the investment theme will kind of continue. As far as the global plays are concerned, look, they are cheap, particularly IT large caps. They are not expensive at this moment, especially relative to the market. They are good dividend plays, but at the same time, I don't think there is any visibility of their acceleration of growth, either from the demand side or the company's own actions. They are utilizing as much as possible. They are reducing their manpower. They are reducing subcontracting. They are cutting costs. Nothing that seems to suggest in their own eyes that there is a large amount of demand upturn which is going to come. So they are great value, but my sense is that there is no visibility of that upturn. And at the same time, I can see the investment team has very good visibility for a multi-year period.
Right. Manish, I heard you say that you prefer rest of the world equities over India. What will it take for you to turn overweight India as compared to our global peers? Would it require global markets to correct, global markets to rally or Indian markets to correct? What will help change that stance of yours on Indian equity?
So essentially, both US and India are sort of fairly advanced in terms of market cycle and sort of, how close are you to a peak? It's difficult to gauge, but they're very, very advanced. Of course, the differentiator vis-a-vis US as far as India is concerned is that India is sort of more. India is not as narrow a market where, as US is, and to that extent, you could argue that there is more meat to Indian markets. But generally, looking at pure cycles relative to other asset classes, they seem sort of very stretched and in a sense prone to some accident. Now, could it be driven by, it could have been driven by the political cycle, but that sort of event hasn't played out. It could be driven by, in India's case, let's say oil cycle, if oil were to participate in the broad-based commodity rally that's happening right now. Or it could simply be induced by US recession, because a US recession typically involves 25-30% fall in S&P, and that sort of, given that India is a beta market, it would also fall. So in a sense, it is sort of as if waiting for a Godot there. If the valuations were to sort of mean revert and relative to the rest of the world, why not? India is a great macro, and perhaps that's the reason why India is so expensive. But the only law in markets which really works over a long period of time, that if valuations are attractive, then only over a long period of time, make decent risk premium. Now, in India's case, the bonds and currencies are relatively much cheaper. So the better way to sort of play India for foreigners that, who I advise also, is actually play the currency through bonds and credit. And there you can get sort of with much lower volatility, significant risk premium vis-a-vis what you've had in last 10, 12 years in both the asset classes.
Manish, and that brings me to my next question. For investors, debt, if you look at investor education, we always talk about how equity is for alpha generation and debt is for protection in that sense. What we've seen over the last couple of years is Indian investors who've invested in Indian debt have not made money. It's been a tough journey, to say the least, right? In the last couple of weeks, we've seen the RBI bonanza. We've seen conversations at the start of this year of India's inclusion in the JPM. We've seen a better than expected GDP reading, which comes in, which potentially delays an expected rate cut from the RBI. Yields around 7%. In the near to medium term, do you feel like there's a case for a fresh investor to buy duration? And where do you see yields at in the next 6 to 12 months?
So the framework of sort of yield reading is that how is your policy structured? And right now, let's say last 5 years, the fiscal deficit has been on average 6.5%. And over next 5 years, given the more sort of Modi, generally his reflex is to be extremely orthodox with respect to fiscal policies. I wouldn't be surprised it's closer to 4.5, barring there were to be a crisis. So there is a significant fiscal-led disinflation. India inflation, the core inflation is already below 4%. And so the real rates in India are very, very high. Let's say the difference between the bond yield today and potential inflation is about 3%. Now that's one of the highest, and that's actually where it's sort of at some margin, would be hurting India growth. And also because, fiscal policies are going to be contracting secularly now, I think the onus to sort of support growth is going to be on monetary policy. So it is true that, current growth trajectory, does not sort of warrant an emergency rate cut. But if you are an investor for 1 to 2 years or 3 years, it's very likely that they're going to be significantly easing because India has space to cut rates at margin. So I won't be surprised if, with a 2-3 year horizon, a 7% bond that is, which is already rallied by 60-70 basis points over the last 6-8 months, would rally by another 100 to 200 basis points. So at the bottom of the cycle, the 10-year bond cycle in next 2-3 years would be close to 5% instead of, what we've had over the last few years at 6%. That basically means that, in a long bond over 2-year horizon, you would still make a 10%, 11% return, very much like equity-like return, so to say. And same thing you could say for credit also, given the great balance sheets, you earn 14, 15% return and significant risk premium vis-a-vis bonds. So those two assets actually for investors, even now, are great assets to dial.
Viewers, keep in mind, big money having options across the world, across asset classes. Think like Manish Dangi. we also need to keep in mind that not everybody has access to all the markets. So that's also to be borne in mind. But Manish, this is fantastic points laid out on that particular aspect. So thank you so much for that. Really, really appreciate. I want to wrap up this conversation by final question to Rajesh. And Rajesh, that is, we will have most probably a gap up over the course of tomorrow and maybe even on Tuesday, a further rally. Post that, if you had cash, would you put in money to work in equities, or would you wait for a pullback because Indian markets naturally are expensive?
Yeah. Before that, I just want to kind of comment on a
Sure.
little bit about what Manish kind of alluded to. One of the big global risk of global slowdown, particularly from the US, the fact that central bankers across the world have moved from 0% interest rates to 5% or thereabouts means that they have ammunition to support growth in case there is a global slowdown, particularly coming from the US, right? So today, if you were at 0%, you don't have any more ammunition to reduce rates and jumpstart the economy. But today, given that interest rates have moved up, that takes away a bit of the global macro challenge of addressing the slowdown. So I just want to kind of lay it out there. See, as far as the shorter term is concerned, yes, there could be a gap up. I don't expect this to be some circuit, etc. This is not 2009. 2009 had seen an awful 2008. We were still at a very, very depressed valuation. Today, we are at actually the higher side of the valuation curve. So my sense is that, yes, there will be a short covering trade. Some people fear that whether a shorter term top, and actually it's getting a bit of a consensus here, that everybody seems to believe that post the results, markets will go up. It'll create a shorter term top because the markets will then look at the budget where there is a apprehension of a capital gain tax coming. So that's a bit of a consensus, but let's see how that evolves. My own sense is that, yes, there will be some upside to this market given the visibility of the next 5 years, but I'm not expecting a runaway market from here in the shorter term at least.
Right, Rajesh, thank you. Manish and Rajesh, thank you very much for joining us on a Sunday morning and helping our viewers dissect everything that's happening around us. But good luck, and we'll hopefully see you in the week again. With that, we'll slip in a quick break. Mayuresh Joshi joins in on the other side to tell us what your strategy should be as you gear up for a very exciting week ahead.
में जो हुआ वो तो सिर्फ ट्रेलर है, ट्रेलर।
कांग्रेस पार्टी की सरकार साल का 1 लाख रुपया बैंक अकाउंट में डाल देगी।
जो मर्जी करते हैं पावर में है, पावर इज टेम्पररी।
सबसे बड़ी कोई देशभक्ति का काम हो सकता है तो 2024 में इनको हटाओ।
Well, Mayuresh Joshi, Head of Research at MarketSmith India, also joins in right now with his thoughts on what seems to be a historic verdict. Mayuresh, with an assumption that, firstly, thank you for joining us on a Sunday morning. Two, with an assumption that the actual verdict mirrors more or less what the poll of polls or some of the exit polls are suggesting, which is a majority, and the market starts rewarding it starting Monday morning, what would you advise some of your key clients to do if they were sitting on a bit of cash?
Morning, Neeraj. So I think going with the presumption that the exit poll numbers translate into reality on the 4th of June, you are going to see a significant bump up tomorrow based on what the exit polls are probably assuming. And if this turns out to be factual in data, I think there will be a further upside on Tuesday as the numbers start trickling in. So I think there are a lot of shorts that have been created by the FPI stroke FIs in the system. And therefore, I think short covering plus good news in terms of the mandate will push the markets higher. Now, in this scenario, again, looking forward post numbers, and as we have historically seen in the past as well, in 2014, 2019, as the election numbers are announced a couple of days after that, markets start reverting back to mean and start looking forward to the next steps that will happen. And the next obvious steps are the 100-day agenda that the Modi government, if they come through in power with the numbers on what is expected to be put out, and obviously what comes through the budget. With the excess bonanza of 1 lakh crore coming in from the RBI that was not budgeted for, I think there is sufficient amount of headroom for the government to probably look at how to use and probably have the right perspective put for that 1 lakh crore, whether to reduce fiscal deficit or otherwise. So the markets will react in a very positive fashion. How do investors who have probably not invested or sitting on cash react? Our sense is that you should have a pyramiding approach. Sectors, in our opinion, which can continue doing well with the Modi government approach that has been for the last decade. The domestic cyclicals, infrastructure, manufacturing, BFSI, consumer discretionary should be the sectors to watch out for. But I think having a pyramiding approach or going in tranches once the numbers are out is the best way to go forward.
Right. Mirish, hi, it's also Samina joining in. You did say that if you're an investor, you've got to continue to remain, stay invested, go with the staggered approach. That's probably the only way to do this. But what happens if you're a trader? If you're coming in on Monday morning, hoping to make a quick buck over the next couple of days, do you think the market will give one an opportunity to do that? Or do you think that's ruled out? Because if we do get a gap up, closer to 23,000, where from there over the next couple of days?
So I do not have a trading mindset, certainly. But genuinely, I think the markets will probably shoot higher. After that, I think they will probably consolidate because the markets will then like to see, as I said, what probably comes through in terms of key agenda points. And there are some apprehensions in the budget as well, some announcements which might be a little bit not pleasing for the markets. And obviously, I think the markets always go with that approach whenever any big budget session probably comes through. So from a trading perspective, obviously, I think there will be opportunities in the market in select pockets. Whether you go short after the gap up that you probably see, I'm not really sure because our belief has always been that structurally, I think the downside risk for India, looking at how the globe is positioned, looks very, very limited. And with a clear mandate, if it comes through, I think that scenario becomes even more likely. So I think long is probably the way to look at it. Maybe there is some element of profit booking that happens over the next few days as the result mandate seeps in. But to that extent, I think not a huge structural downside for the markets.
Okay, Mirish, what sectors would you bet on now? Because would policy continuity mean that you continue to bet on the expensive defense, capex, stuff, or would ancillaries? I mean, some people are making the point that there is a commodity upcycle. Cement and steel haven't really had a big rally, especially cement. And maybe if there's a capex push, cement could be that one sector to watch. If you had to bet on one or two sectors, what would these be?
So clearly, as you pointed out, and we also feel that capital goods infrastructure should continue doing well from a policy perspective. However, I think a lot of stocks are very expensive in terms of forward multiples. And as we see it in markets with India, they're trading in late stage basis, which makes it a very difficult case to enter at such elongated valuations. Having said that, cement as a space, as a subsector, in our opinion, should continue doing well, because if the reform processes are pushed through in terms of urban rural housing, in terms of infra growth, and what we've seen through in terms of a lot of cement company commentaries, a lot of capacity additions which are expected to happen in a very gradual fashion. And if demand exceeds the kind of supply constraints that we're probably seeing at this juncture, utilization levels along with expectations of stable realizations should probably ensure better growth prospects for these companies. The second element also in terms of capex manufacturing might be certain themes associated with ancillaries. So as an example, power ancillaries as a space should continue doing well, because the Modi government has an ambitious target of 500 gigawatts by 2032 in terms of renewables. Power financing companies have done exceptionally well, Neeraj. But there are a lot of power ancillary stocks which can still do well, in our opinion, assuming the entire landscape moving towards renewables and execution happening on that front in a very holistic fashion. Real estate ancillaries as a space also should start picking up, because if we are in a 6-year cycle, in the third or the fourth year of the real estate cycle, new houses have now come up in terms of the cycle formation, and therefore I think ancillary stocks can start performing well. They've gone through a periodicity of pain, but as refurbishments happen both in new and existing homes, with input cost stability that we are probably seeing, there is good scope that can happen out here. Last but not the least, BFS has a space with expected rate cuts expected to come through. So large private banks and a few of the large NBFCs should also start benefiting in terms of this cycle and expectations of balance sheet growth.
Mayuresh, the last couple of months, we've seen big brokerages, not just locally, but globally as well, calling the Adani Group stocks a proxy to play the India growth story. We've seen some of the rallies from these stocks have put up in the last few weeks. Friday, case in point, 10 of those Adani stocks have seen massive gains in trade. Do you feel like the Adani Group companies could be a good proxy to play India, and maybe there is still an opportunity to make money here and potentially buy some of these counters?
Quite a possibility, Samin, on pullbacks, because what is probably happening is they've gone through a periodicity of pain in the last 1 year since the Heidelberg report came out. But since that periodicity of time and what we are positioned right now, I think a lot of water has flown under the bridge. So to that extent, I think balance sheet dynamics have remained stable. They are showing signs of improvement. They are in the right spaces where government capex is expected to continue. Private capex is expected to come back very, very strongly over the next couple of years, which probably means that all the right triggers that you're probably looking in the spaces that Adani operates out of, whether it's ports or transmission or power, will continue growing at a good pace. And they will execute at a good pace as well. So I think from a strategic and an earnings viewpoint, both tailwinds for the sectors that they operate out of and the execution capacities and capabilities that the entire group has, along with a very strong eye in terms of maintaining their balance sheet leverage position individually as well at the corporate level for a consolidated basis as the group is concerned, should be very well taken care of, looking at the events that have probably happened over the past few years. So I think, yes, they might be a proxy, but there are alternate proxies as well. Case in point being L&T, being the biggest proxy in terms of the India growth story.
Right, Mayuresh, thank you very much, and we'll hopefully see you soon. It looks like a very exciting week ahead for all of us. And the market's, of course, set for a big move into Monday and Tuesday. But thank you for joining us. Have a happy Sunday and see you next week.
Thank you.
Well, Samina, suffice to say, my takeaway of this 50 minutes of conversation and all that we heard on the channel yesterday as well, that policy continuity, bet on themes that the government has given a push thus far, because it's difficult to take the foot off the pedal, and bet on that stock called India. Never mind the valuations, because what this verdict might do is enable people to believe that that expensive valuation multiples will sustain because there is policy continuity.
Well,
what's yours?
Like we said this earlier, right? India is the Nvidia for the world in this case. It's a big story you're betting on, and the markets are going to, of course, reflect that as we come into trade on Monday. All things aside, a big gap up is what we're gearing up for. Of course, come Monday morning, we'll tell you what you should be doing if you're a trader, what you should be doing if you're an investor. But the big win here will remain with the investors who are, like Neeraj Singh, buying India for the next 5 years. It's an opportunity none of us should be letting go of. With that, we come to the end of this very special coverage on Sunday. But as we wrap up, let's listen into more market experts who my colleague Tamanna caught up with last evening, talking about what's next for markets and more on election 2024. Listen in.
I think immediate reaction would be there in PSU, railway, defense names, which has been the case. But I agree with Deepan, some of these can't pay 50, 60 earning multiples to irrespective of how big or lumpy the order book is. I think more importantly, in fact, I'm on the other side. I think the numbers are in line. It is good. If the numbers are very high, they could go ahead and do capital gain tax changes, which may not be great news for the market. So I'll be very happy if the numbers are in line with Deepan said is the base case. Which it's India also needs a good opposition. We can do the drum beating and like big mandates and all. I think, but for a healthy democracy, you need the right balance. And if the current numbers hold like around 350 for the NDA, 300, 310 for BJP, I think it's the right balance. I'm nobody to decide the number. But I always say people give clear mandates. They've been giving it for a while. We should not question the wisdom of, almost a billion people who are eligible for vote. Secondly, I think, Tamanna, most importantly, then you have budgets. And I think if you see, we are at a cusp of a inflection point. Our capacity utilization is 75%. See the gross capital fixed formation, it's touching 30% of GDP. Of that gross capital fixed formation, 35% is private corporation. So this is now a private sector-led capex as well. It's not just government spending and reviving the investment cycle. And any continuity with the focus government has had on the investments and capex, it's very good for the economy. And I keep saying this, if we can grow 8% when Fed rates are 5.5%, 6%, when there is global turmoil, when the supply chains are disrupted, we will do much better as supply chains ease and interest rates, the other cycles start. So it's looking very ominous for India. And I personally think we have the best decade ahead of us.
So it's looking very promising for India, I think is what you mean. So yeah, in fact, for the street, the GDP data, the GDP figure, which has come in at 8.2 for FY24 is astonishing. Sandeep, just on that point, anyone who watches the Indian economy has not found a convincing argument for the India alliance. And do you think that is, maybe that's the political strategy? But the whole conversation, the whole narrative has not been on this line of increasing manufacturing, reducing the fiscal deficit and all of the economic side of things. And do you think that's been sort of a miss?
No, that's not sort of a miss. I think maybe that's a calculated strategy in terms of their electoral strategy. That's what the India Alliance or especially Congress took. I don't think the Congress allies went into that mode. They were very, very reticent about on the economic front or what they're going to be their approach to an industrialist, etc. And they were pragmatic about that. Congress was going hammer and tongs about Adani, Ambani, and even, in earlier times, Priyanka Gandhi made statements as what do people manufacture nowadays, all that. So they were coming through. In fact, towards the end, Jairam Ramesh had to make some comforting noises saying that, no, when we come, we'll do a bit of both. We're going to have these policies that trying to assuage the apprehensions of the street as well as the industrial community. So that's the point I was making to you earlier also, sitting here in the US, meeting some people or talking to some people, I was hearing that whole thing. There was a lot of, discomfort as soon as with this Khadakat and other principle. The point, what I'd like to link to this, Aditi was making this point about how much is BJP numbers. I think the same thing holds true for India. My own assessment is in line with what Rohit was saying. The NDA allies are going to do much worse, or they are not going to add incremental numbers too much to the NDA thing. So you'll find when you're talking of 350, etc., the bulk of the contribution will have to come from BJP. So I don't see if 350 happens, BJP sliding down and riding piggyback on their current allies. They may have to get other people. Equally, I don't know what's the split in the India Alliance, because India Alliance, how much is Congress getting and how much others? I think they're the allies will bring in much more votes for the India Alliance when you're seeing the total numbers. And that's where I think the game was also being played in this election, Tamanna, between the two things. There were two sets of India Alliance fights were happening. One were the regional fights, which, whether in West Bengal, it is the TMC, which was really fighting BJP. If you go down south, Also, or Maharashtra, when you're talking about, it was the Shiv Sena, Uddhav, and NCP original, which were fighting the BJP or the NDA, rather than not so much of Congress. Congress could have had more, share of voice or the share of TV time. But these are the people who were doing those fights, and that's where the equation will tilt. What finally you find happening, and that's what again I think Rohit was alluding to. If you're finding in this 130 or whatever, if the share of the allies is much higher, that's where you'll find BJP trying to swing some of them.
ये 10 साल में जो हुआ वो तो सिर्फ ट्रेलर है, ट्रेलर।
कांग्रेस पार्टी की सरकार साल का 1 लाख रुपया बैंक अकाउंट में डाल देगी।
जो मर्जी करते हैं पावर में है, पावर इज टेम्पोररी।